everyone, welcome to Your Money, Your Call. I'm Nina May. Well, joining me tonight to analyse today's market action and of course take your calls live on air are Francesco D'Estratis from Ord Minnett and Roger Montgomery from rogermontgomery.com. So if you have a question for my expert panel, then now is the time to call. There's the number at the bottom of your screen, 1300 30 34 35, and we look forward to getting you in on the conversation during the program. Francesco and Roger, welcome. Great to see you both back again. Gee, Christmas is getting close, isn't it?
Thank you very much.
Interesting day on the market, Roger, because loads of trading volumes going through, really high levels. Quite unanticipated for this time of the year, isn't it?
Well, maybe people are taking profits to get out. But of course, you know, if you've got one side trading, you've got to have the other side. So who knows? I mean, my view is that trying to analyse these things really doesn't help in terms of generating great returns, and in order to get the right answer, you'd have to talk to every single person who traded and ask them why they traded today. But volumes were high, which was unusual. The NAB news comes as a bit of a surprise to me. I think I was on the program with you recently saying that AMP was paying a very rich price for AXA as it was. And look, I'm glad I own CBA and not NAB. We'll talk more about that, I'm sure.
Shares went gangbusters today, up by, what, 13%. NAB, on the other hand, its shares came back on about 3 p.m. and I think it finished up down about 5%, and that really did drag the market down, didn't it, Roger?
Think about this. On the one hand, you've got the target going up in price because everyone's excited that the takeover bid's been made and there's a premium there, and you know, and so up it goes. But the shares go down. The takeover company, the company making the bid, goes down because, hey, it's not going to be good for them. It's an expensive price, it's a rich price, there's no doubt about that.
But wouldn't they do it unless it was good for them?
But this is the interesting thing. No one 6 months ago was saying, gee, NAB should really buy AXA, you know, that'd be a really good tie-up. Now the deal's made, everyone's saying, well, you know, they can do this and they can do that and it'll be great for them this way. The reason why people weren't talking about it before, because it's not an obvious union. The reality is, as your funds under management get bigger, it's harder to continue to grow them. It's easy to go from, you know, I've run boutique funds management businesses, it's easy to go from 10 million to 50 million, 50 million to 200 million, much harder to go from 10 billion to 20 billion or 20 billion to 40 billion. It's just, you know, the reality is we've got 22 million people in this country. It's not an enormous country. So the upside, I think, is limited for some of these bigger companies, and that's why I think you shouldn't be paying such a high price for them.
All right, gentlemen, we've got plenty of callers waiting to have a chat with you, and I think we can go to our first one. We've got Mario from Blacktown on the line. Hi there, Mario.
How you going?
Hi, well, thank you, and thanks for joining us.
My thoughts on Leighton Holdings. I own Leighton Holdings. I own Leighton because of its growth prospects and its strong balance sheet, and the return on equity is pretty stable. It's more than 25%. And it's got good growth coming ahead and big projects, and today announced first quarter earnings were up 25%. So, and John Walking said he's confident from going forward. I just want to know your thoughts on Leighton for the longer term, not short term, like because in my portfolio. Thank you.
Okay, so we're looking at a longer term here. LEI is a stock code there, and there is the chart for Leighton. Of course, big announcement today, winning another big contract. This one's worth about $200 million, I think. Telecommunications side of the business winning this key Defence Department contract.
I think it's trading about fair value, and it has been for a while now. Look, the reality is that this is one of the few large contract construction companies in Australia, really, and because there's only 2 or 3 really big players, two that I can think of immediately that seem to win all the contracts, you know, they're always going to win contracts. That's what they do, and they're a great quality business. There's no doubt.
What about the Dubai? Sorry to interrupt you there, but I do wonder about the Dubai link.
Yeah, well,
is it significant?
Well, yes, it is. When any country defaults on its debt, that obviously throws up a problem in terms of how confident you are in terms of your growth prospects or your growth forecasts. And if you had pinned your hopes on a particular country and you were going to grow your business there, well, maybe you'll peg back those expectations. But the reality is, this business is not going anywhere in a hurry. It's going. I mean that in a positive sense. It's going to be around a long time. It has got a very good rate of return on equity. It is a top quality business. It's just not cheap. You know, I'd love it to be cheap, and I like buying things when they're bargains. It's just not a bargain at the moment. It's about right.
Yeah. Okay, thanks so much for the call on that one, Mario. Good to chat with you. We're going to Sonia from Sydney now. Hi there, Sonia.
Hi. G'day. I'd just like to ask the panel's opinion, and in particular Roger's opinion, on CSL over the medium term.
Okay, CSL is the company, of course, one of the companies lately to benefit from the greenback and
Sure.
so, you know, the fall in the Aussie dollar. It's come under a little bit of pressure lately, and CSL and QBE and the likes are doing all right. Roger?
CSL's in my portfolio, so I have to put my hand up and say I own it. I think it's one of the few A1 type businesses in Australia. You know, great quality, great performance track record. It's a business that is run by a terrific manager, world-class guy, and look, I think it's got great prospects. It is also cheap. What the catalyst is going to be that's going to cause the sentiment towards CSL to change, I don't know. What I do know is that you've got a terrific business and it's at a cheap price. Well, you know, I've got it in my portfolio, and that's about the best testament I can give it.
Yeah, and as you said, you know, you like things that are cheap.
Yes, I do.
Paul from Melbourne, you're up next. Hi, Paul.
Yeah, good evening, Nina.
Good evening to you. Thanks for joining us.
Compliments the season to you.
Oh, thank you, and likewise.
Nina, what I'm interested in is the panel's opinion on a firm called Paddy's Foods Limited. It's PFL is the code. They have brand names such as 4 and 20 Pies, Herbert Adams, Chef's Pride, etc. I'd be interested in the panel's opinion on the prospects and more particularly a valuation on this company. Thank you.
Okay, I like a good pie. Let's see if we like the look of Paddy's Foods. PFL is the stock code. Is this one that either of you are familiar with?
I'm not sure if this is the gentleman who sent me an email during the week, and I haven't looked at it recently. The last time I did look at it, I noted that the performance was mediocre as a business. Maybe that's improved, and I'm more than happy to look at it again. I just haven't done that.
Peter from Victoria up next. Hi, Peter.
Good evening, panel. I've got a few shares in Industrea, and I'm just wondering what the panel can give me their thoughts on the company. Thank you.
Okay, IDL is the stock code. Let's take a look at the chart. It's currently about the 45-cent mark.
It's a company. Look, the reality is that in the range of companies that exist on the market, you have the choice of buying a bit of everything, or you can just stick to the ones that you feel most comfortable in. When I say that, I mean the ones that I think are the safest to buy. I know the most about them. They're in my circle of competence. They're cheap and they're great quality. Industria just falls, for me, I can just see things that I like more. That's all. But when I look at it purely on paper, I agree. It's a good business, and it seems to be reasonably priced. I won't go so far as to say it's a bargain, but it's reasonably priced. So this is going to be a great night.
Yeah, I know. You can disagree whenever you want.
Yeah, well, we will.
I'm sure we will.
Can I just talk
Sure.
before we go? I've got the Leighton's numbers here.
Yes.
Now my valuation this year for Leighton's has been $28.34.
Oh, it's way above that.
$36.30 for 2010. That's only 6 months away.
Yep.
And $47 for 2011.
Oh, well, it's currently $37, so
Yeah.
there you go, looking at around about your 2010 price. Okay, if you'd like to get in on the conversation and have a chat to Francesco and Roger with me, then do give us a call on 1300 30 34 35. We are going to take a short break. Back with more of Your Money, Your Call in just a minute.